Hello guys, I'm Guna and I'm going to talk about business nature. We have two companies over here which is Perdana Petroleum and Gas Malaysia Berhad. Perdana Petroleum is Malaysian's own petroleum company which gives petroleum services all over Malaysia and also being the leading company which produces and services petroleum. Whereas Gas Malaysia Berhad is the company which giving services to produce natural gas all over Malaysia and being the leading company for a few decades.
Hello, my name is Tuan Nurizati binti Tawan Asih. Today I would like to present about ratio analysis for horizontal for our company Perdana Petroleum Berhad. For 3 years, is it 2018, 2017 and 2016. First of all, I would like to explain about horizontal analysis. Horizontal analysis, also known as trend analysis, is an analysis of the year-to-year change in each financial statement item. Horizontal analysis refers to studying the behavior of individual financial statement items over several accounting periods. Purpose of horizontal analysis. The purpose of horizontal analysis is to determine how each item changed, why it changed, and whether the change is favorable or unfavorable. It's a way for analysis to compare accounts or performance metric over time to see if the company is improving or declining. Okay, now I would to explain about ratio for Perdana Petroleum Berhad. We have 14 ratio, which is current ratio, net working capital, fixed asset turnover, total asset turnover, debt ratio, debt to equity, gross profit margin, net profit margin, return on asset, return on equity, operating profit margin, account receivable turnover, earning per share, and average collection period.
Okay, move to the horizontal analysis of gas petroleum. So what is horizontal analysis? Horizontal analysis is used in financial statement analysis to compare historical data, which is ratio. Horizontal analysis can either use absolute comparison or percentage comparisons, where the numbers in each succeeding period are expressed as a percentage of the amount in the baseline year, with the baseline amount being listed as 100%. To complete the horizontal analysis, I have used 14 of ratio, which is current ratio, net working capital, fixed asset turnover, total asset turnover, debt ratio, debt to equity, gross profit margin, net profit margin, return on asset, return on equity, operating profit margin, account receivable turnover, earning per share, and average collection period. We calculate it on 3 years from 2018 to 2016, and from that we can make a vertical analysis.
Next, I'm going to talk about vertical analysis. For current ratio, gas can pay its current liabilities from its current asset 0.99 times over compared to petroleum, which is only can pay its current liability 0.01. For net working capital, both petroleum and gas cannot pay their short-term liabilities. For fixed asset turnover, petroleum is the higher ratio, which is 6.55 times, compared to gas, which is 4.79 times, because the petroleum reflects the effectiveness of fixed asset to generate. For total asset turnover, gas is satisfactory compared to petroleum because this ratio shows that management does use resources efficiently to generate. For debt ratio, petroleum is high ratio compared to the gas, and this situation is not satisfactory and risky. For debt to equity, petroleum is higher ratio than gas, means that more assets were funded by debt than equity. This is show that petroleum is unsatisfactory. For gross profit margin, petroleum is the higher ratio, which is 100%, compared to gas, which is 4.6%. It shows that petroleum company can control production costs and the condition is satisfactory.
Next will be continue with net profit margin. With this ratio, petroleum is the high ratio 13.71% than gas 2.8%, which is indicate better income to shareholders. Return on asset, gas is the high ratio 7% than the petroleum 2%. This show gas indicate higher return on firm's investment, which is satisfactory. Next, for return on equity, gas is the high ratio 17.1% than petroleum 8%, which this ratio indicate higher return to shareholders. Operating profit margin, petroleum is the high ratio than gas, which is satisfactory and better productivity. Next is about account receivable turnover. With this ratio show gas is the high ratio 8.32 times than 1.82 times, which is satisfactory. It shows that gas is effective in extending credit as well as collecting debts. Next is about earning per share. Gas is higher with 27 cents, but petroleum is only 5 cents. Gas earning per share are always better than a lower ratio because this means the company is more profitable, and the company has more profit to distribute to its shareholders. And for the lastly is about average collection period. Gas on average collected credit sale every 44 days. This is better than petroleum because gas ratio indicate that gas firm has no problem in collecting debts.
Last but not least, I'm going to talk about my part, which is the conclusion. In conclusion, we can see that both companies have their own finance department. However, there are a few recommendations on how to improve their organizations. One of the ways recommended is to train their staffs. This step must be taken in order to ensure that the people or team who is in charge with the company's account are really proficient. They must be able to adapt and understand fully on the company's financial procedures and any accounting software that have been used by the company. Therefore, this step is highly recommended for the company to conduct a special training in order to optimize its finance team's performance. Next step is by improving collaboration between departments in the company. This is because the finance department in the company cannot run on their own without other departments' help. They will always rely on the other departments for their financial data. However, a few companies' departments request data from each department manually really use up too much time. Therefore, in order to improve the company's efficiency, it is recommended for all the departments in the company to use a shared system. This shared system will eventually help in shorten the amount of time exchanging data from one department to another. Last but not least, the company can try to automate its manual processes regarding its account. In this advanced technological era, most of the companies in the world have already left their manual accounting and moved along the advancement technology happened in the era. This advanced system will help the company's finance team to generate reports, calculate profits and losses, create invoices, record and save transaction details in just a few clicks. By having this helpful system, the team's valuable time will not be wasted and they can focus on other important jobs. Thank you.